Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we'll take a look at the Australian dollar. Well, it's maybe a bit unexpected choice from us, but I have taken a look at our recent analysis that we have prepared last week. So we mostly have discussed the situation on the euro currency, Great British pound and the New Zealand dollar. So the setups that we have announced and that we have discussed are still valid, and they already we already have estimated the targets with the setups and what we're expected to see. So, and markets right now, the currencies that I have talked about is, they mostly stand in a way that we have specified to the targets that we have appointed. So they already stand in progress, and nothing really new we could add right now. So all that we could do is just update the current situation. So euro currency has moved higher to the 1450 area, and it stands just 50 pips lower than our first targets around 115. The Great British pound is also retracement. The market is moving to the target that we have estimated, and probably it will continue to move to this target. So but on the Australian dollar, guys, we have really interesting and thrilling setup on the long-term charts, and it is showing the real progress since our recent discussion last time when we have taken a look at the Australian dollar in the end of the March, and since then market has completed some pattern. It's also the shapes of the patterns that we have specified initially, that was hardly to recognize. Right now they are really clear, and that really will open the perspective for the big potential. Australian dollar is right now very interesting, also because it stands in a big relation to the gold market. Australia is we could probably say that it's just a single country with a healthy interest rate level, and it makes it really attractive. This combination is very attractive. It's high central bank rate that is accompanied by big relation to the gold market that just rebound from the ash and taking the more and more pace to the upward action. Now we even think that the gold market could really stand in the long-term bull trend. We have talked with some analysis in Europe, and some traders announced on the big banks, they see that the gold market really could reach really exciting levels. So that's 2,000 level, 2,500 level on the gold market. If we will take into consideration this, let's call it the positive scenario for the Australian dollar could move to the next monthly targets 1618, and it could lead market to the 1.6 level, so 2 times higher than market stands right now. So that's why Australian dollar definitely will be among the major currencies that we will track in the current and the next year. So before you will watch the final part of this video, it probably will make sense to read our weekly research, because especially on the high time frame charts, because all moments that we will discuss here is the part of the bigger picture that we have on the weekly chart, and there you will be able to combine the part that you will see in the current video with the charts that you will see in the video or in the weekly research. So this will just let you to get the total picture, the whole picture that we have on Australian dollar. So our long-term target that we would like to get on Australian dollar is 81 area. So, but right now market is forming the huge, large head and shoulders pattern, reverse head and shoulders pattern on the weekly chart. And in fact, here market is turning to its final point, is creating of the right shoulder. This double bottom pattern, guys, is the part of the head and shoulders pattern. So in fact, this is the part of the head. And recently, last week, market has completed this head and shoulders pattern. So if you take a look at the target, A, B, C bottom, 2 times extension, has been hit. So usually target of the double bottom is the depth of it counted from the neckline to the upside. Or we're using usually the ABCD extension with the 200% destination point. So market has hit this level. What is more interesting is that this level is also the neckline of our hand shoulders pattern. It also has been tested. The upper direction has been finalized by this free drive sell pattern. So I do not have any extensions here, just to keep charts as clear as possible. But if you will peel the extensions, you will see that this top stands at the crossing of the 1618 of the first drive and 127 of the second drive. So this is, it's a bit, looks not really perfect shape. It's a bit choppy pattern, but still, mostly it keeps the harmony with the extensions. That's why I think that we could treat it as the free drive sell pattern. This is not really important right now, but we will need it just to get more confidence with this reversal. So when you see the reversal pattern at the top of the upward direction, this gives you just more confidence that this reversal probably is real reversal. So what we have, last week market has dropped to the first fib support 75.50 area and simultaneously has reached the daily oversold. It means that in the beginning of the next week we probably will get some minor bounce. We'll talk about it a bit later. Our destination point of this retracement stands right here. This is the really very strong support area. This is daily confidence 73.85, 74.50 area. It's also the former neckline of this double bottom pattern. So now it will work as the support. Also, guys, this is an area where the bottom of the left shoulder stands. So market should keep the harmony of this pattern and should find the support somewhere in this area. So currently, guys, this is our major object to watch for. We would like to take the long position in Australian dollar. And this is the major area that we will monitor for possible taking the long position. At the same time, guys, daily chart brings a lot of different scalp setups. So if you're an intraday trader, since we're mostly daily traders, so that's why our daily video mostly dedicated to trading on the daily chart. But if you're a scalp trader, you trade on intraday charts, you could use at least 2 more setups for trading. So the first setup is right here. This is the stretch. So you could try to take the scalp long position with the upward bounce. We will a bit later we'll talk about the possible target of this bounce. Second, you could try to take the short position as a result of this bounce with the downward continuation right to our destination point. That's also the opportunity for trading. But this, guys, is suitable not for everybody. So only if you have the experience of the trading on intraday charts, you could try to do this. But anyway, gold market, daily chart of the Australian dollar brings at least the 3 setups. First setup is bullish stretch on intraday charts for the Jordan-Napoli pattern. Second, possible downward continuation to our final point. And third, our major object to watch for is the taking the long position with the medium-term upward continuation based on the weekly hand shoulders pattern. It's very gold mine, in fact, for the traders. Now, some words on the stretch. So on the 4-hour time frame chart, what we see, probably here market has hit the 1618 target. So let's just check it. It has missed to check it. Let's try to check this out. 618. Okay. No, not quite. Let's turn to the upside. Well, just from the starting point, maybe. Anyway, it's upward action has started. That's probably as a result. Market hasn't quite reached it. Maybe just due to the hitting of the support on daily chart and the oversold, market has turned to the upside. Well, anyway, the possible upward action, guys, we think that it should be a deeper level to the upside. Why? Because market right now stands at the oversold. That's why this level hardly will stop market in upward action. Upward more action probably could happen. From that standpoint, we're mostly like this level at the destination of the stretch pattern. This is 77.25 is a fib level, and it's accompanied by the weekly pivot, resistance one, on the next week. So this will be very nice destination point. Here, we do not know what will happen. Currently, guys, it looks like ABCD pattern to the upside is possible. But as you can see, market hasn't quite reached the 1618 target. That's why we can't exclude that market could form some kind of the double bottom with the Russian rinse of these lows. If this will happen, in this case, it just will take another shape, but after that retracement probably also could start. So that's why be careful where you will take position with the stretch, because this will be additional task for you, how you will trade this setup. I mean the daily stretch pattern, because on reaching the 1618 target creates additional risks that market could drop slightly lower, grab the stops below these lows, hit the target, and then start upward retracement. This will force you to make some choice. So whether you will place stop below the 1618 target, or you will just wait for downward continuation, the market will hit this target and turn to the upside, or you will maybe apply this scale-in trading. So this is your headache, how you will trade the bullish setup on the daily chart. I mean the stretch. But that probably will be the destination point when the market could turn down. Also, guys, why I think that the 77.25 is a possible target, because if you will plot the oscillator predictor, here you will see that the middle point between the bands, oversold and overbought, stands approximately in the same area, so 77.25. This is usual target of the stretch pattern. It's the middle between the bands, so both oversold. If you use the trended oscillator, that matches to the 0 point of the trended oscillator right here. When the trended oscillator hits the 0 point, it means the stretch pattern is mostly worked out, despite whether it has shown any upward action or not. Stretch pattern is a dynamic pattern in time, so that's why it's really very tricky pattern. It's not really very successful to trade it. It's really difficult pattern for trading. But currently, guys, if bounce will still happen, 77.25 is most probable destination of this trading setup. So that's been said, as you can see, the Australian dollar really brings a lot of opportunities for trading for every trader. But for us, we mostly are watching for ending of this downward retracement, and as we hope, this final point will happen somewhere in an area around 74 area. And here we will be watching for opportunity for taking the long position.